Students, today's topic, bad debts, second part actually, is provision for doubtful debts. Let's understand this adjustment, provision for doubtful debts. Convention of conservatism and prudence concept is followed while preparing the final accounts. It means that expected losses are provided while expected income are not. Applying the prudence concept, provision for such likely bad debts, that is, debtors who will not pay, is made every year. Because of the conservative principle, we know that some of our customers will not pay back the money. So business, as a prudence concept, prepare a provision for that. When they create the provision, then the journal entry they write is profit and loss account debit to provision for doubtful debts. Because of this provision, profit reduces. So we debit profit and we show the lesser profit into the books because of the prudence principle. That means any losses and gains, any losses we must show. Debit to the profit and loss account reduces the current year's profit and the amount of provision is carried forward to the next year. Now when debtors actually becomes bad, the amount of bad debts is debited to provision for doubtful debts, hence does not affect profit. Provision for doubtful debts is deducted from the amount of book debts, that is debtors. Let's see now. Provision for doubtful debts. If the amount of the provision for doubtful debt is given on the credit side of the trial balance, in the accounting point of view, it is known as old provision. Accounting point of view, it is known as old provision. If additional provision for doubtful debt is made for the current year, then that is known as required provision or new provision. Old provision or opening provision, you can say, students. This is an old or opening provision. And this is the new or required provision. New provision or required provision. Required provision. Now some points you should know. Bad debts given outside the trial balance are known as further bad debts. And this further bad debts, if any, must be first deducted from the debtors. Then the percentage given on provision for doubtful debts is applied on the remaining debtors in order to get the provision for doubtful debts. For the bad debts and provision for doubtful debts are both deducted from the debtors on the asset side of the balance sheet. Next is provision for doubtful debt is created only on doubtful debts and not on bad debts or on good debts. In our sum, for the sake of simplicity, it will be written that create provision on sundry debtors. That means entire debtors who are not bad, those are good debtors, but you don't know who is good and who is doubtful. So we consider entire debtors as doubtful debtors. And on that only the thing is created. Okay. Next, let's understand this all by doing a sum. Provision for doubtful debt sum. One extract of trial balance is given, bad debts, debtors, bad debts recovered, provision for doubtful debts. These values are given over here. Now, what is the meaning of bad debts recovered? We know that bad debts, those which has turned bad, now they are paying us the money, so bad debts recovered. If it is given in the balance sheet, if it's given the trial balance, is already adjustment is done. There is a further bad debts of 10%. One adjustment. Create a provision for doubtful debts at the rate of 10% on sundry debtors. Let's see how the PL account and balance sheet will look like. So when we have the bad debts recovered part already given in the trial balance, so we have recorded in the credit side because the income closed in the P&L account credit side. Then the required provision we have to find out is 1800. We will see how it is 1800 coming. We had a bad debts in the trial balance 4000 that we have recorded. In the adjustment there was a further bad debts of 10% or 10% of 2000 or 2000 given in the sum. So that one 2000 10% of debtors, 10% of debtors, 20,000 was the debtors value, so 10% is 2000. So that is further bad debts. So 4,000 in the trial balance, 2,000 as a further bad debts. And then we have what? We have the old provision which is also there in the trial balance. See, 2,000 in the old provision or the closing provision, the old provision or the opening provision rather, that has to be subtracted if you are writing in the debit side. 5,800. Why I emphasize on the debit side if you are writing? Because we could represent this in the other way also. If we want to represent, we can represent like this also. We will write old provision 2,000 less bad debts, less further bad debts, less provision for doubtful debts. Then also we will get one figure over here. But in that case, our old provision being so less, we are not writing in the credit side, but we are writing everything in the debit side. One more way we can write, that is we will just write the new provision over here 1,800, then bad debts, then further bad debts. We will write the figure over here as 7,800, and this old provision we will write over here in the credit side as buy old provision 2,000. Automatically it will come 5,800. So any of the means, any of the ways you can show the sum, but this is the most better way, most applicable way. In the balance sheet, it will be always shown like this: debtors less bad debts 2,000, and then less provision for doubtful debts 1,800. Why 1,800? 10%. You see that 20,000 minus 2,000, that is 18,000. After subtracting this further bad debts, what figure came of debtors? That is 18,000. On that 10%, that is 1,800. So 16,200 is the good debtors which is left. Next, one homework sum for you students. You all will do this homework and send it to me. Thank you, students. Next, we will do another video again. Thank you. And solve the sum.